What's up everybody, Nate here, and today I want to talk all about California. Now, in case you don't know, California pretty much has the highest prices for everything across the country. Gasoline prices in California recently crossed the $7 mark, and housing in California is also extremely expensive too. Now, this is all on top of an inflation problem that we have all throughout the United States. In fact, inflation for May of 2022 was around 8.6%, meaning all of those really expensive prices in California are only bringing a lot more hardship to all of its citizens. This has made the California legislature try to get really creative in bringing some relief to its people. Right now, they have a budget surplus, yes, I said surplus, of around $97 billion created from tax revenues. They are now trying to figure out ways to give that money back to the people in the form of a stimulus check. A stimulus check that would go towards groceries and housing and the rising gas prices all throughout the state, and the 23 million Californians could be receiving $1,050 in a stimulus check later this year. So we're going to be going over the pros and cons of this brand new bill that is being proposed by the California State Legislature, everything you need to know about the proposal, and of course, how all of this is going to affect our economy and other states in the future. But remember, if you like this video, make sure to smash that thumbs up button below, sub if you haven't already, and make sure to ring that notification bell too. That way YouTube shows my videos to way more people around the world, and I can keep making videos just like this one. Thank you so much for doing that, and now I want to talk about this recent proposal. So the California legislature has been pretty creative as of lately, trying to figure out new ways to bring relief to its people. They recently proposed a big bill that would essentially give all Californians, all 23 million of them, around a $300 to $400 gas card. But this bill was essentially shot down, and the reason it was shot down was because they wanted bigger, widespread relief. They wanted to give Californians more money so that they could go out and buy things like groceries or their other energy bills or housing. That is now becoming a reality because of the Golden State stimulus bill that recently hit the state legislature in California. Essentially, this would cost the government of California around $17 billion, only a fraction of their $97 billion that they have in a surplus for their budget. Now, this stimulus would function pretty much in the exact same way as the national stimulus that we saw back in 2020, except this time it would be only localized to California. They would be able to spend this money on pretty much anything that they want to, so groceries and energy and housing and any other debt, they would be able to spend that money on. The big argument that I have started to see from not only California but a lot of other states is that this really isn't going to help inflation. Giving people a whole lot more money, they are just going to go out and spend it, which creates a lot of other supply and demand issues, which only ultimately makes inflation go way up. Now, I want to talk about this in depth, so let's kind of get into it. Will inflation get worse if California gives out stimulus? Well, in the short term, probably not. So as California gives out these stimulus checks and as people spend them, well, the supply chains won't be really disrupted as of that point, and supply and demand will mostly be exactly the same. It also is really important to remember that Californians are all going to spend their money on a variety of different things. A lot of them are going to spend their money on groceries. A lot of them are going to spend their money getting down their debt and also in gasoline. So with all of that being said, in the short term, inflation probably isn't going to go up because all of those things that they're buying also have to catch up in order for inflation to really rise. The reason you have supply chain related inflation in the first place is because you have way more demand than there is supply. This is part of the reason why we're seeing inflation so high in the United States right now. It's because during the pandemic, a lot of people were out of work. And while people were out of work, there just wasn't enough things being produced, but people were still buying at the same rate because of stimulus all throughout the United States. That meant that we have the supply chain demand problem, and that has only gotten worse as we've gotten problems like the war between Russia and Ukraine, and also continuous lockdowns in China. A lot of that supply can't get to the United States, causing more supply and demand issues. Of course, the bigger issue with inflation by definition is when your monetary supply goes up in a country. Now, the reason that creates inflation is because now the United States is printing a whole lot of money. They then give that money out to people, and the people go out and spend. As they spend, businesses have to create more, but right now businesses can't really create more, having that supply and demand issue. But if they can produce more, well, that's not free. They now have to hire more people. They now have to supply people with more, building more factories, so they take on additional costs. And when that happens, they now have to trickle all of those additional costs down to you, which is why we have inflation in our economy in the first place. Now, California might suffer from this in the long term, depending on what people do with this money, depending on how this money gets spent. Well, you could see a lot of people spending either all at once or taking this money and kind of spreading it out over a long period of time. Now, it's worth mentioning that they also want to try to suspend parts of their gas taxes in California. This would bring down the price of gasoline in general, and couple that with the stimulus, now Californians are going to get a ton of relief on their gas. Gas prices might end up going down by around 15 to 25 cents in certain areas, and you have a lot more money to spend because of a lot of the stimulus payments. That could ultimately drive up the price of gas in the long term, because now you have a lot more demand all at once for gas. People will simply start buying more of it, at least that's the idea. Now, again, with this specific bill, we don't know how Californians are going to spend their money, and this is really key because Californians might not end up spending their money in California. They may actually go to other places, neighboring states, and spend a lot of this stimulus in those areas. That could end up being a problem for other areas too, because now you have an influx of money and an influx of people buying and spending a lot more, which causes inflation to go up in those areas, and the people don't really have a whole lot of money. This is something that I could potentially see happening in a lot of vacation areas, like in Florida or Las Vegas. Vegas in particular, because it's so close to California. They could end up going to Las Vegas and spending a whole lot of that money, hurting the economy there, but really building it in the short term. But I think this kind of creates an interesting problem for California in the future. California is only able to do this because they have such a huge budget surplus. Like I said, around $97 billion. They got this mostly from tax revenue. So during the whole pandemic, most people actually made a lot less money. People were furloughed, people were unemployed, people were laid off. Everybody was pretty much out of work in 2020 and in parts of 2021. That meant that our entire economy went into a recession because even though there was some spending, it wasn't fast enough or nearly enough to support our economy in general. Businesses went under, and we had a lot of problems with inflation because of all of that money printing. However, California didn't really see this because they had a lot of their incomes actually rise during the pandemic and the 2020 recession. This is because a lot of the individuals in California are a part of the 1% in the United States. More billionaires live in California and in other states like Texas. So as those incomes went up, they really supplied a lot of the tax revenue for Californians and for the California government. That is why the California legislature has such a huge surplus, because in 2021, every market in the United States was booming. The real estate market and the stock market and the cryptocurrency market all hit record highs. Now they are starting to come down though, which could create a really bad problem for California in the future, because now you have all of these programs, you have all of this money that you need to keep up, but you're not getting the same amount of revenue. In addition, a lot of the ways that California has grown over the last couple of years has come from those extended unemployment benefits and stimulus checks from the federal government. And without all of that money coming in, what is California going to do if it can't rely on the government and it can't rely on those incomes fastly growing? Then you're not going to have as much money to count on in 2022. So it's going to kind of be interesting to see what they do with their stimulus and what they do with their surplus, because they can buy and do a lot right now with their surplus, but they have to be careful to not overspend, because that could put them into a position in 2023 of not being able to afford or finish a lot of these projects. Now, in terms of the stimulus bill, it's pretty much going to work in the exact same way as the 2020 stimulus worked. Based on how much you make, that is going to determine how much you get in stimulus, with the highest earners getting the smallest amount of stimulus and the lowest earners getting the highest amount of stimulus. Some have argued that this isn't really the best use of California's budget surplus. A lot of the Republicans in the state legislature in California have talked about improving the supply chains and trying to do a lot more drilling so that way they can get more gas, and that will ultimately bring down prices in general. Now, for a long-term solution solution, they're probably right. The cause of inflation right now is that gas prices and demand is so high. That is one of the reasons why California has such high prices in general, is because everything is in demand. There is just so many people that live in California in densely populated areas that, well, everything has to cost a lot more. Everything is in short supply, from housing to groceries to gas. You need to pay a whole lot more, and that is basically the California premium, and it's why people typically make a whole lot more money from their jobs in California in general. So that is another thing to consider here. As California starts to spend this surplus, as people get all of this money from the government, well, that money isn't really going to take you as far as you think. Like I said, this is simply just short-term relief. You're not going to be able to spend all of that money really easily. You're going to have to spend a whole lot more all at once because everything costs so much in California. It could help a lot of other neighboring states, but also could cause some serious problems depending on how much people actually spend in those neighboring areas. Another really interesting thing about this bill in California is that these stimulus checks aren't supposed to be sent out until late October. That could mean that a lot of the inflation problems that we're facing and a lot of the demand that we have already gets sucked out in our economy because of the Federal Reserve at that point. The Federal Reserve is raising interest rates, and we're already starting to see markets like the stock market and commodities and real estate and cryptocurrencies crash because of that, because investors just don't have as much money. Other markets are going to start coming down too, and that could mean a lot of the demand is already sucked up in our economy and prices for everything start to come down. So by the time those checks go out, Californians might end up not really needing them as much as they did before. This entire proposal in California has not been completely passed as of yet. It still has a couple more hoops to jump through, but it looks like it's going to be passed sometime soon by the deadline of July 1st, which is when the budget is supposed to be approved. It's going to be very interesting though to see how other states kind of react to this proposal being passed if they decide to do something very similar. Other states don't have as big of a budget surplus, so they wouldn't have as much income taxes to generate a lot of that revenue, but they may still try to give their citizens a whole lot of money, and that could cost a lot of other states in both the short term and the long term. And I know this is something that the federal government has been kicking around too, more stimulus checks or direct payments to Americans for things like gas and groceries, but when it comes from the federal government, well, the federal government doesn't have a budget surplus. They have a budget deficit, and they pretty much always have. That would mean that the only way that they're going to get that money is to print it, and that would be a serious problem for American citizens. In the short term, it would feel great. Americans would have the money that they need to spend on things, but eventually that supply and demand would get out of whack again, and inflation would only go up because the federal government is literally increasing the monetary supply again. Other states are going to have to try to get creative with this, but if they can't come up with the money, then they certainly shouldn't be asking the federal government for any stimulus check opportunities. Like I said, you need to try to work on the root problems of inflation in order to try to bring it down, and it doesn't really seem like California is concerned with that at this point. They believe that inflation is going to go lower in general, but as people continue to spend more, demand is most likely going to go up. Now, I hope this doesn't create a problem in California where people are overspending beyond their means and continue to do so for a long time. That could make prices in California just stay high forever because now that is basically the standard, just like everything else is in the state. Higher gas prices, higher housing, you name it. I'm a firm believer that people need to rely on their own finances first in order to get things done, and that includes inflation. Inflation isn't going to be solved by California giving out stimulus checks. It's only going to be a short-term solution that makes them feel really good right now, but could cause a lot of bigger problems down the road depending on how people spend that money. And it really only opens the door for California and other states to consider this in the future when inflation is high or there is a recession around the corner. People want to spend a whole lot more money, but spending isn't always the answer. A lot of the times it's what you actually do with that money rather than just having a whole bunch of it. California is trying to just throw money at the problem right now, and I'm not really convinced that that is a complete solution to this problem. But now I want to hear from you on this issue. What do you think about California giving its 23 million citizens a stimulus check in 2022? Do you think that this is just going to raise inflation, or do you think this is going to help millions of Californians get by and actually spend money on things that they need and want this year? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.